All right, here we are. Closing bell is right now. Google's going to come out with its earnings. This is an after-hours tick chart that's going to record. I'm going to put the level 2 right here, people, and you are going to see a whipsaw action. A lot of controversy around these earnings. There it goes. It's making a move. It's all over the map right now. It's dropping hard. Let's see. There's a big red bar. Let's see what happens. I don't have a report. Now it's right back to 582. You people just watch that stock go from 586 to 570, and then they're running it up off of that 570 mark. It's live in action right now. I don't have a report. There it is. It's being traded live. Yes, the excitement's running high. It's been all over the map. Let's see what it does. It's all over the map. Okay? We don't know what the report is. I was just showing you the knee-jerk reaction live of what happened. Now we're dropping down pretty hard here. Let's see what the report is. It's been all over the map. That was over a $20 move. And, you know, so basically that's what's happening right now. Let me pause the tape and I'll come back. Let's take a look off the bottom of the 570. I don't have a report. I will update you. You just watch that stock go up and down faster than I've seen it. Here we are with the Google beat their earnings by 29 cents a share. We came down. They sold it off. The report is not a bad report. It's kind of like the IBM, and it's kind of like, you know, the news was great. That was a blowout beat at 29 cents. I will go over more of what these earnings are. There was, and it's all part of this China deal. We will rebound over the next month. We have a long-term position on it. And the thing about it is we hit 550. This is 554. There will be a conference call that comes out on the earnings. We had some people buy the dip down here at 550. Well, it's actually 551. We'll keep a protective stop in after hours here to protect that trade as it consolidates. And we'll go over the numbers more in depth. This is the after hours on Google. They beat by 29 cents a share. They beat huge on the bottom line of the earnings. And basically, whether it was IBM, whether it was Intel, whether now Google, whether it was some of the other bellwethers, Goldman Sachs, who blew out their numbers. Goldman Sachs went from 171 down to 156. And we're seeing the same thing here in Google, except it's a buying opportunity. There was nothing wrong with the quarter. Once again, we're seeing a lot of manipulation in these earnings. Google was not overbought going into the report. I just helped traders get in down here at that 550 mark. We will be buying more off of the dip here. We will find out what they have to say on the conference call. And there's a lot of volatility in these earnings. And these earnings, once again, the markets were overbought, but independently, Google reported a great number. We will be buying more of the short-term position on the drop. Hedge fund managers, mutual fund managers, people will come barreling back into the stock. It's not the only time that it's done this, and this was the after-hours downtick right there. These were spikes back up, and we are currently printing at 557.40. We will be looking at buying that $550 call that we had bought over the last 9 months and made so much money on. We bought all of these contracts and had sold them before. And this is the advantage about having a long-term view on something, is that you have to go with the long-term view. Okay? And the long-term view on operating revenues, earnings per share, the way they leverage the cost, we don't see any negativity whatsoever. We didn't see any negativity in some of the other bellwethers that have reported. And so therefore, looking several quarters forward, we will see the opposite of what will happen over time. And we will buy down here at the bottom accordingly. Okay, once again, I report Google beat by 29 cents a share. They leverage their operating margins. It's been a very wacky earnings season, and the thing about it is, if you have the longer time view, that you can buy the bottom in here, because this is a buying opportunity. We'll probably never see it this low again. So we can get, we're going to do a special on the options trading as to how we can buy the calls at 550 that are going to lose all their value. And just to give you an idea, for a short term, I will show you that these contracts right here were today $43. Those are the 550 calls that were in the money. These are going to gap down tomorrow. I'm going to buy 10 contracts here. They're going to bounce. These contracts are going to get super deflated on the bottom. We're going to buy them, and they're going to bounce $10 very quickly and very fast. And that's the advantage of having enough buying power and being able to take advantage of the dip. That's the 550 call that we'll be moving in on to buy up that bottom there when they take all of that premium out, meaning they're going to take all the value out of that 550 call right here to where it is right now. It's at 557.99. We're bouncing nicely. We got some senior traders that got in down here toward the bottom. Like I told you, they're going to try to hold it for at least another hour or two and see how far that retracement off the bottom is. What we hope to get tomorrow is that the stock would come back down here to that 550 level. Our traders will sell it right in here right now. So they're going to take, they're making $7 off the bottom here, and we will be call buyers on this trade tomorrow. And we will do a special as to where it ends up. This is a live after hours trade, www.stockmarketfunding.com. All pro trading students will be buying the bottom end of this great earnings report. This is a major way that at times they can shake people out. They can take the greatest news in the world. They'll drop the bids in after hours. They'll create all kinds of things in the equity that do not warrant to sell off, but buyers will be stepping in big on Google. And we will be buying the dip to offset our, we have calls that go out until 2011 January. And we've got 4 quarters of earnings left because they don't expire for 12 months from now, but we'll buy a lower end trade. We'll take advantage of the weakness and we'll average our trade and we'll be set up correctly. And over the next several quarters, we'll see even, today was a great blowout number. The March quarter, that will be coming next. We'll look for a big run off of the bottom. Fundamentally, I don't see anything wrong with the report. And I've sent the report out to everybody to read. We'll wait for the conference call that's coming out and see what Eric Schmidt has to say.